Hello, welcome. My name is Matt Leatherman. I am Managing Director and Research Strategist here at FCLT Global. We're excited to welcome each of you this morning or this afternoon, as the case may be, where you're located. I'm excited today to also be joined by all of my colleagues from the research team here. I'm going to begin by providing some introductions. We have Alan He, Victoria Telez, Joel Paula, Jesse Pollock. You'll hear from all of my colleagues today during Town Hall. It's really a heartwarming moment to be able to share with each of you. Thanks for being here. Team, in addition to everyone who's in the room. You are in FCLT Global's Town Hall. We're going to spend our time today focusing on some flagship research that we have underway or recently released. And then we're going to conclude with some things that are coming up as well and make a point of emphasizing how you can get involved in our work. We mean for this to be a dynamic experience. We put a lot of thought into how to make it a dynamic experience. Part of that is the opportunity to put questions into the chat throughout Town Hall. I'll do my best to weave them into the conversation. If I'm not able, though, we have reserved time at the end of this session for the team to take questions and answers that are in the chat. So again, please go ahead and put them in as you have them. I'll be monitoring those. I'll do my best to include them. And we'll also get to any questions that remain at the end of our session. Before we jump in, though, straight to the content, we'd like to take a moment and just level set about who we are and what we do here. I'm going to share my screen in order to do so. The commonality in all of the work that you're going to see today is our mission. A mission to focus capital on the long term to support a sustainable and prosperous economy. It's important enough that we wrote it into our name. That's what the FCLT stands for. I'm going to pause before I go too far into that, though, and make a point of saying thanks to all of you. We couldn't do this work without you. I'll say a word about what that exactly means. Here's our strategy. We begin with a CEO problem-solving community. These are our member founders who created us, who are willing to come together, talk amongst themselves, and identify areas of opportunity for longer-term focus. This research team will then receive that insight, go back, do research, and try to produce something influential and practical from it, and then ultimately bring that back out into the public domain so that we can use our own leading voice and also help you mobilize for change. Your organizations are part of each stage of this research. So for those in the room who come from a member institution, your CEOs participate in this problem solving. This research team is going to invite you into the research process, and they're going to make this resource available on a shared basis to everyone in the public domain when it's done. I do want to say a little bit more detail about what that is as well. You saw on our mission slide, and you can see on this one also, that we are a cross-value chain organization. We really do believe that when we're able to get owners, managers, and corporations together, we can solve or improve many of these challenges of time horizon that bring us together. So you'll see owners, managers, and corporations around the world on this slide. That second bit, around the world, our global focus, is also really key to our identity. We're not trying to solve for quirks of any national market. We're really trying to surface long-term behaviors and the way to practice them on a globally general basis. Again, we call this to your attention in part to level set who we are, but again, really to say thank you. There's a lot of institutions on this slide. Each has brought a whole lot to our work, and we're deeply grateful for it. Now, when we do this work well together, what happens? This right here is what happens. Together, we're able to have longer investment horizons. We're able to have broader business objectives that find a connection between stakeholder and long-term value creation considerations. And we're able to have greater participation in capital markets. In other words, this really matters. This is not an arcane exercise. This matters out in the real world. I'm excited now to get started. Last week, I hope many of you saw our release of a product called FCLT Gold Standard. Victoria Telez led that work, I'm excited to invite Victoria into the conversation right now and really get going with our town hall. So Victoria, if you could begin this part of our conversation by just saying a word about what do long-term organizations look like and how would you describe the gold standard in that context?
Absolutely. And thank you, Matt. Good morning, evening, afternoon, wherever you are in the world. Thank you for having me today. And FCLT has been answering the question of what do long-term organizations look like since our inception 8 years ago. This project particularly is our attempt to answer that question in a codified way. So in the form of 3 questionnaires for asset managers, asset owners, and companies, which Matt talked about, which is our value chain. So slide. There we go. So each question in the gold standard maps back to one of our 5 levers. And the same way all of our research maps back to these 5 levers. So they are governance, engagement, incentive, metrics, and policy. One note, FCLT uses the policy lever to provide feedback and expertise to policymakers, but we do not engage in political advocacy. We are apolitical. So next, I want to invite you all to take a second to look at this QR code.
I'll say a word here as well, folks. This QR code will take you to our website. You'll be able to see all of the work that Victoria is about to describe. Let me encourage you to go ahead and open that up and save that tab. Victoria is going to open up the website here in a minute as well and provide you with a primer. So you don't need to do all of that right now, but we do want to make it available to you for your own interaction afterwards. So if you can, please open that up and then hold the tab and look at it in a little while. While you do that, Victoria, can you say a few words about how Gold Standard came to be?
Yes, so the gold standard pulls from expertise from our members, our previous research, academic literature, and industry experts. So for the past year, FCLT has been building the standard, and for the last 6 months, we've been piloting the gold standard with you all, our members. So we've spoken to several of you and hope to continue the two-way dialogue. For example, the member CEOs took the gold standard, a version of this questionnaire actually at our summit this past spring, and provided us some feedback. Some members submitted feedback through a feedback form on our website, and we conducted over 25 one-on-one pilot interviews on the gold standard with you all. So thank you so much for the effort these past few months to get us where we are today. This is not just a sum of all of our research, but a listening exercise about what is important to our members and to the industry at large. So thank you so much.
I'm going to echo that for a quick minute. I'm just looking at the participants in town hall right now, and I see a number of people and a number of organizations that participated in this pilot, including some that I had the privilege of participating alongside Victoria with. You really did add a lot. This product reflects your insight. We hope that this is a fulfilling moment for you as well. Let's get down to business though, Victoria. What are our findings?
So these pilots actually yielded so many insights from our members on user experience, but also use cases for the standard. So on the user experience front, I would say a couple of interesting findings. Most organizations are not going to get a 10 out of 10. This is aspirational. It's by design that way. The most common score I would say was between a 7 and an 8. Some questions did do a partial yes or no. So yes, we do this, but only at certain parts of our organization. Or no, we don't do this, but we're thinking about it. So some questions weren't perfect yes or no's, but this mechanism of forcing a yes or no does prompt deeper discussion. So one thing that really stood out to me was, if it's a no, why is it a no? If it's a yes, is it a resounding yes? Is it a partial yes? So those types of discussions really came about. So this wasn't the beginning, or this was just the beginning. This wasn't the end of the exercise.
Sure. And Victoria, you heard me say at the outset that we're really trying to prioritize cross-value chain solutions and cross-value chain perspectives. So I'm going to ask that we take a turn there as well. What were the different players, owners, managers, and corporations most interested in from the work that you did here?
One thing we noticed on one quick point on the value chain is some members and some organizations just don't fit perfectly into just a corporate or a manager. For example, if you're a publicly listed asset manager, you might want to take the corporate questionnaire as a company, but the asset manager questionnaire as an investor. So as a whole, though, the asset owners were especially interested in the governance lever So the questions around governance, boards, asset managers really wanted to discuss incentives as it relates to the relationship with their clients, with the asset owners. And then corporations really wanted to discuss long-term roadmaps, R&D, how to be long-term or also meeting those short-term expectations.
And then another thing that's going to be thematic throughout town hall and that I center at the beginning as well is that we try to be practical. We try to provide something that our members and the others can use. And you have use cases written on this slide. So let's go there. Can you unpack the use cases for us?
Absolutely. So it's helpful to know what the use cases are not, which is not a compliance exercise. We're not looking for check the box compliance or data collection. We're not asking people to give us their answers or share this publicly. The use cases really depend on who's taking the questionnaire. So for example, the board members and CEOs really like to take the gold standard as a self-assessment tool to see what their long-term orientation is and also as a way to engage with one another. Corporate leaders really wanted to use the gold standard as a communication tool with investors. So, while the board and CEO are doing kind of a look in the mirror exercise, the corporate leaders are doing a look at your stakeholders and share and engage exercise. And then we also saw some investment leaders in asset management wanting to, showcase their long-term orientation to their clients, the asset owners, in diligence conversations. So these are a couple of use cases. I would say there are many, many more, but these are the ones that really came up over and over again as potentially interesting ways to use the questionnaire. And Matt, if that's okay with you, I want to actually do a deeper dive into this questionnaire. We're talking about it. I want to show you all what it looks like and navigate it on our website. So I'm going to quickly share my screen here, and it may
Victoria,
take 1
while you
second.
do that, I'll give people just a word. Victoria's showing the screen that the QR code goes to. So you're getting the real life primer now.
Absolutely. So hopefully everyone can see at this point. So here's our website, FCLT Global, mission, members, programs, up here, Gold Standard. Now it's part of this website is the Gold Standard tab. Here's a description of what I was talking about. What does it mean? What do organizations look like when they are long-term? And this is trying to answer that in a very simple way by design. However, every question packs quite a punch, right? They're not simple. They are actually really deep questions that take a lot of effort to answer and a lot of thinking behind it. So I'm going to do a little bit of a demo here. And as I mentioned earlier, you can see these buckets that we talked about: the governance, incentive, engagement, and metrics. And one note on future success. So our corporate members, this lever was by demand. So you all asked for it. And it is the lever that really focuses on that theme of innovation, R&D, pivoting the business to stay resilient. So all of those themes are here in this question. And if you click down on each question, you'll see there is a description of why we think the question is important. And then there's a quote from our library. So in this case, we're quoting balancing resilience and efficiency. This is something FCLT worked on. But you might be wondering, did they just do one paper on this? What else did they have on this? What are where else can I look for more information? Here's a link. You can click on more information. And this is true for every question. I'll show you just number 9, for example. Every question has this. If you click on the link, you will go to what we're calling the handbook. So there's a gold standard handbook that breaks down each question. Same description here. Balancing resilience and efficiency like we saw earlier. But here we go. There's all of these resources, all of the times that we wrote about resilience or funding the future or R&D and this theme. Because like I said, each question packs a punch. You can't say yes and just move on. It's probably yes and or yes but or kind of, right? So we can really drill down on that question looking at our research. So here, Funding the Future 2020 white paper on funding innovation. If you click on that, it'll take you straight to our website where you can actually see the toolkit here. And like I said earlier, this is true. We can go back to the gold standard again. This is true for all of our questions, right? So we have here a question on engagement, under engagement and dialogue for asset owners. Again, here's the library, more information, and you'll note this will take you to the exact page. So you don't have to scroll through 40 plus pages of the handbook. You clicked on question 7. Here's question 7 and deeper dive into the engagement question for asset owners between owners and managers. All of the mandate work we've done, and a lot of those responsibility mandates, all of those papers that some of you might be familiar with and have contributed to. Matt, I'm going
Victoria,
to stop here.
yeah, thank you. I'll just take a moment to say Gold Standard is a synthesis of our 8-year research library and more. We're really proud of it. Victoria has done the work over the past year to get our arms around that to the level of 10 yes or no questions for owners, managers, and corporations. And it's an incredible effort. We commend it to all of you, but Victoria, we want to give you a moment in the spotlight as well and just say thank you for the remarkable work that you've done. This is a really special project, and we hope that everybody in the room will make use of it and reach out as well. Tomorrow, everyone who signed up for Town Hall will receive an email from our team. It will include the link that you just saw and also the QR code and ways that you can follow up. That includes making use of it yourselves. So please be on the lookout tomorrow for a message coming from FCLT Global about Gold Standard and everything else that you're going to see in Town Hall today. Victoria, I have observed a little bit in the chat, but I'm going to keep going for now, and we'll weave some of these questions in toward the end, if that's all right.
Thank you.
Thank you. Another flagship product that we have is called FCLT Compass. And here I'd like to invite Alan Heat into the room to begin to get this conversation started, as well as Jesse Pollock, who's going to be part of the Compass conversation. Alan, let's begin with the basics. What is Compass? Where did it come from? What's this about?
Thank you. So at a high level, Compass is our flagship annual report, sort of a benchmark that really seeks to answer the question, how much money is managed in a long-term way? And this really ties back to some of our research categories that we saw a little bit before this, about tracking whether investment horizons are getting longer or whether they're not, and whether there's a greater participation in capital markets. So us at FCLT and FCLT Compass really aim to track where assets are in the capital markets and how that's shifted over time. So Compass, as you see here, measures capital flows for what we call an implied investment horizon in years, whether that's, for example, an average holding period for an investor's portfolio, an average use of capital for a company. Compass is now in its 5th year, and we've really seen some meaningful change in how time horizons and assets and wealth have shifted over time through each year of doing this, and now through our 15 years of data collected.
All right, Alan, that's the teaser. Let's see it. What's 5 years of research shown us?
Yeah, absolutely. As we see in this slide, we do have some decent sized changes in our investment horizons over our 5 years of Compass doing this and 15 years of data overall. On the company side, companies have gone a little bit shorter term in terms of investment horizons. And this is primarily due to higher increased dividends and buybacks, as well as a shift to some more asset-light models. When it comes to our asset managers and investors overall, they have gone a little bit more long-term due to a rise in what we'll call index funds, as opposed to active management, as well as a shift overall towards alternative assets. When it comes to our savers, our households and communities, that has gone shorter term. Households are now more invested in cash, equities, tradable securities, and less into long-term savings. Now, given all these changes, you might be wondering, what is the big takeaway here? And I'd say that the fact that we see these 3 bars move over time is one thing, but it's also good to highlight that there's a gap between the 3 bars. It's not like we're seeing the 3 bars equal in length, equal investment horizon. The markets aren't perfect. There's a gap between the intended and the actual horizons amongst capital as it flows between the markets. Not everything is perfectly aligned.
I might take a moment here just to tie it back to our mission and strategy and membership as well. When we talk about focusing across the value chain, this is a big reason, of course, you know why. It's hard to focus capital on the long term when different nodes of the value chain have markedly different investment horizons. So that's one reason why servicing this fact is so important. For the benefit of everybody in the room, FCLT oftentimes uses the device what's the information, and then so what about that information, the punchline or the why of it. So Alan, let's play that game for a moment. What's the so what? What does this all mean practically?
Yeah, absolutely. I think so what here in terms of wealth is that one big trend that we've seen in our 15 years of data, change in global wealth. We see on this slide that the US actually manages most of the world's money, but as a sneak preview, that's not where it originates from. US asset managers, so you think your BlackRocks of the world, your Vanguards, your State Streets, or Fidelities, they manage most of the world's money. They account for 74% of the world's total managed funds. And likewise, when it comes to public companies, 50% of the total market value share of all public companies are from American companies. That being said, however, on this next slide, if you look at this same map of where that money comes from, where it originates, our so-called asset owners, so to speak, the US makes up a far smaller percentage. In fact, here, it only accounts for about 27%, far from the 74% that money that gets managed. Furthermore, I'd say only one from our research, only one of the top 10 asset owners, largest by AUM in the world, is from the US. And it's not a sovereign wealth fund or a large state pension fund. It's a thrift savings plan from the Federal Retirement Thrift. And this really got us thinking, who really owns the world's money? How can we better make these folks more long-term? With that, I think my colleague Jesse would like to talk about some more of this and how we're really updating Compass this year to be more aligned with capital market participation and mobility in general.
Jesse, welcome. We're excited to include you here as well. Alan said at the outset that this is the 5th year of Compass, and it's an ongoing effort. This is not the culmination of it. We're going to continue. So let's do that. What's new? Where are we going?
Thanks, Matt. Great question. So this year we're taking Compass in an exciting new direction that's even more aligned with FCLT's mission of driving that sustainable long-term value creation for savers and communities, as well as other parts of the value chain. So as Alan just briefly mentioned, in the past we focused mainly on these trends, specifically that change in investment time horizon across the value chain. But this year we're going to dig a little deeper into 3 key areas: capital market participation, economic mobility, and retirement savings. So first, we'll explore capital market participation, and that's mapping out how it looks today and asking a crucial question: how can we get more people involved in the upside of these markets? Second, we're shining a light on the stark reality of limited economic mobility across several countries. And spoiler alert, the US does pretty poorly, especially in comparison to other countries like Denmark. This is really where those gaps become most clear. And third, we'll examine retirement needs overall. We're asking, in a hypothetical scenario, if households stopped working today, how long could they reasonably sustain themselves with their current net wealth based on their consumption and expenditure levels today? And these insights are directly tied to that goal of driving long-term value creation for savers and communities.
I'm going to tie this back into the themes at the beginning of the conversation as well. Our mission is to focus capital on the long term in support of a sustainable and prosperous economy. And the why of it all is longer time horizons, broader business objectives, wider access to capital markets. And I hope everybody in the room can really see those fingerprints markedly in what Jesse is sharing right now. This immediately ties into mission level work for FCLT. Jesse, let's take it to the individuals in the room. How can members get involved in this work?
Right. So as always, we're looking for member-driven solutions. And these are ideas that aren't reliant necessarily on government or public policy at all. So some examples might include things like employee ownership plans, customizable and portable retirement funds, or even types of educational bonds that are outside the government scope. So to that end, we're planning to host a working group in the winter of 24-25. And we'll soon be reaching out with more information, so stay tuned there. We'd love to see all of your participation in that. But the bottom line is that there's a real opportunity to shape solutions here, and we're very eager, as hopefully you can all tell, to collaborate with you all and how we can make this vision a reality. So thanks, Matt.
Thank you, Jesse. Alan, we've actually had a question come in that I think we might be able to weave in pretty well right now, and it's just about the way that we calculate investment horizons. Before we move on to our next topic, could you just say a word about how that functions?
great question, and thank you for those in the chat who mentioned that question. I'd say investment horizons means something different for each of our groups across capital markets. For companies, it means how, on average, on a weighted average, is the money that they spent across the years. What is their average years across their uses of capital? Whereas some things are across a longer horizon, like research and development, like CapEx investment in buildings and pipelines. Other things might be for the more short term and the near term. So things like taxes, interest expenses, dividends, and buybacks. That being said, what's true for companies might be a little bit different in terms of how we calculate it for investors as a whole. For asset managers, that might be a function of what their holding period is, what their turnover is for the specific portfolio. And for the asset owners, it might be their intention. For a household, it might be their intention to retire within 30 years if they're a working individual. It might be their allocation to an emergency savings fund, both of which carry different number of years across horizons.
Thank you, Alan. I appreciate that. We're getting ready to turn to another flagship product that we have. Before I do, though, I want to again say, please be on the lookout for a message from FCLT tomorrow. It will have information about Compass in it as well. Like Gold Standard, this is a multi-year effort that you're looking at right now, and putting together a methodology that allows us to measure time horizons across different types of institutions has been incredible work. And Alan, I want to make sure that you get that moment of thanks as well. We appreciate you delivering this for the membership for FCLT with the very able help of folks like Jesse and many others who have been part of that project. Thank you. Again, for everybody in the room, more to come tomorrow. Please be on the lookout. Now, I'd like to invite in Joel Powell in particular. We have another flagship product, the third that we're going to talk to you about out of 3 today, called Ahead of the Curve. Joel is doing this work together with Alan and Jesse, but is going to get us kicked off. Joel, I think that a lot of folks who work in long-term investing can relate generally to the idea of being ahead of the curve, but can you say what it means in our terms, and particularly why we're focusing on carbon emissions, as folks can see on this slide first?
Yeah, thank you, Matt. I'm excited to talk to participants today about this project that's just getting underway now. So we'll talk about opportunities for members to get involved in a few minutes. But just at a high level, we're really looking at the price of carbon as a financial input. So lots of things affect long-term investment decision-making, like taxes, like inflation, like interest rates. For this project, we're looking at the long-term cost of carbon. So the future price of carbon and how that will impact decision-making amongst various capital markets participants. And so to tackle that, we're looking at, I guess, 2 different perspectives, 2 main perspectives. One is that of asset owners and asset asset managers, so investors more broadly. And that's really about sort of portfolio level decision-making, how the future price of carbon will affect portfolio allocation. And then for corporates as well, we're looking at different various tools that companies can use to bake in, so to speak, the cost of carbon in their investment decision-making. So capital allocation and budgeting.
Joel, I appreciate it. We actually had a question come through that's more on the corporate side. So I'm going to hold that question, but use this moment, because we have corporates coming up soon, use this moment to remind everybody in the room to please continue getting your questions in the chat, and I'll work them in as well as I'm able. It would be helpful though, Joel, I think, to go to owners first, and then we'll go to corporate. So can you walk us through what staying ahead of the curve means for an asset owner?
Yeah, sure. So for asset owners, basically higher price of carbon will impact investments and are a significant factor in the valuation of public equity markets, for instance, public debts. It'll also affect private markets investments. So asset classes like private equity, infrastructure, real estate. And then also there are, of course, implications at the tactical asset allocation level and long-term strategic asset allocation level. But on the next slides, as we get into some of the mechanics of where we are right now in terms of how carbon is priced, we see that there's been a lot of initiatives either through fuel taxes, carbon taxation, emissions trading. But in reality, the price of carbon is really undervalued by the market. Just a few statistics to throw out there. Only about 23% of global emissions are currently covered by a tax or an ETS. So the vast amount of global emissions are not priced into markets right now. Something like 80% of financial professionals in a recent survey believe that climate risk is mispriced in the stock market. So I think a lot of practitioners also believe that. The effect, to the effect that long-term investors allocate capital to build future savings, either to pay long-term benefits or to build future savings. There's acknowledgement that there's a lot of pressure, I guess, from constituents as well to really capture that risk in the price of portfolios. On the next slide, so this is also an illustration of what's happening globally, and really what jumps off this page is that there are things that are happening, but it's fragmented, and for an investor that allocates capital globally, there's different things happening, different prices in markets, so it's really difficult to keep track of that all. Investors also face that task of closing the gap. So what is priced in the portfolio and what is not? So that's another thing that's proven to be a challenge. We also find that few investors are really systematically applying carbon charges to their portfolios. And instead, it seems to be that there's been a lot of focus sort of on bottom-up analysis, or just to make or avoid particular investments based, on a case-by-case basis. So this is really about sort of developing more of a top-down framework using the price of carbon as a guide. On the next slides, so how do we overcome some of these challenges that investors are facing? Well, imagine this is just a simple portfolio right now. And the question is, how would the price of carbon affect, a typical allocation going forward? And so we're talking about ways of accounting for the cost of carbon through charges. That could be sort of at the asset class level, at the portfolio level, maybe using building blocks approaches to assumptions that flow into the models that drive long-term asset allocation. So that's really the first narrow question that we're really trying to ask in this project.
Sure.
That's the high level overview for now. I'll stop there.
I appreciate it, Joel. A moment ago, I mentioned that we would also turn to companies. So let's go ahead and do that now. Alan, I think we should call you back in at this point. Can you go deeper in parallel about what this means for companies?
Absolutely. And for companies, it's all about how this carbon pricing fits into capital allocation and decision making. So as Joel mentioned before, these changes are coming at you really fast. However, what we found is that very few companies are indeed looking at this issue and doing something about it. Many are struggling on the how of how to do a good job. And this slide shows a simplified example of this dilemma. Project A and B both have their own merits, but the ultimate capital allocation decision can really differ depending on how companies and CFOs view carbon as a whole. If, for example, they view emissions as free, as we see here, and not priced into a company's capital allocation decision process, which we're seeing is currently the case with many companies, they'll go with Project B. However, when emissions are priced for the long term, when that future cost of carbon is priced into their capital allocation decisions, that attractiveness of Project B might wane a little bit, and companies might opt for Project A instead.
Alan, let's turn to the practicality of it all, right? How real is this for companies?
I'm glad you asked that, and for an answer, frankly, very, very real. What we're seeing is that really only 14% of all MSCI all-country world firms even have an internal carbon price to begin with. And in our conversations with other members and other folks, a lot of companies have told us early. But to drive the point home, it is coming at you fast. The median internal carbon price per ton has already risen from $20 a ton to $50 a ton in the span of just 3 years alone. And that number, I would assume, is going to keep going up throughout the years. Leading companies are adopting internal carbon pricing, incorporating it into the capital allocation decisions to try to get ahead of that curve. But it's not yet commonplace just because it's hard.
For sure. Now, in the prior two flagship areas of research that we've talked about, Gold Standard and Compass, we've told folks to stay tuned for a message coming tomorrow about ways that you can review this content and get involved. I'm going to ask you the question also about how members can get involved, but highlight for folks who are listening that there's an even nearer term answer to that question for this project than there has been for the others. So Alan, could you take that turn with us? How can members get involved in the work that you're leading here?
Sure. So we do plan on having two working groups in this series. One, as Joel talked about, focus on the asset owner perspective on October 15th, coming up next week, and one on the corporate perspective coming up on December 12th. So the October 15th working group, let's explore really what leading investors are doing now. What are some examples, leading examples of how investors, asset owners are incorporating this change? We're going to try to discuss methodologies for capturing the cost of carbon in investment portfolios, build that case as to why the cost of carbon is such an essential input in these things, and lay bare strategic implication and inputs. When it comes to the one on corporates we'll be having in December, we're really hoping to examine two things, the how and the why. How are companies incorporating carbon into their capital allocation decisions through potentially cases from our leading corporate members that have begun doing this, have begun thinking about this, are doing a decent job, and why? Why specifically so few companies have an internal carbon price to begin with and are using it to inform their capital allocation decisions? What would it take to drive greater update?
Alan, I appreciate it. Thank you. What you've just heard from Alan and from Joel is about the ahead of the curve flagship product that we have. For those who are following closely, you've seen that we've underlined these on the bottoms of your slides. I'm getting ready to take a turn toward our upcoming projects. But before I do, I have a couple of questions that have accumulated. And I want to make a point of calling those in now and inviting more as well. Victoria, a couple of these questions are for you. One participant asked a question about Gold Standard in the context of corporate governance frameworks. What makes this different from things that people might already be familiar with out in the public domain?
Yeah, so one thing that I think is helpful to emphasize is that this isn't like a governance check the box exercise or even a compliance exercise. So I would make sure that the lens being used here is this aspirational, look in the mirror, look at your stakeholders, engage, and think about what deeper conversations each question probe. One of our best case studies with one of our members was they took the Gold Standard internally to each head of their department that could answer the question, and then they had a meeting about all the yeses. Why were there no's? Were there good reasons for the no's? And they decided some of the no's are really good reasons for it, and they were going to not think about it further, but just having that discussion. So it's not necessarily a governance framework because there is a governance portion, but there's also this portion on incentives, on engagement, on metrics. So it's a little bit broader. It's the issues that the leaders, the CEOs care about. It's very CEO level, at the company level. And also it does have some governance, but I would say very different from the governance frameworks that we see today.
I have one more for you, Victoria. This question is specifically about Gold Standard for asset managers who may run a variety of different strategies, long-term core strategy, maybe also some tactical value add funds. So the question is, would the Gold Standard questions be applied just to, for instance, the long-term core strategy, or would they be applied to the whole thing?
That's a really good question. We actually ran into that with almost all of our asset manager pilots. So as a whole, the Gold Standard is really meant to be answered at the organizational level, not at the fund level. The questions are CEO, CIO level, and for managers, they largely do focus on that relationship with the client. However, there are different types of funds, and some answers might just be a partial yes. Some funds, yes, some funds, no. the conversation we hope happens there on a deeper level is probing those no's. Like, why is it a no? Again, do we have a really good reason for it? Is it by design? Is it just an accident? How can we think about this? And then the framework could be used later to communicate to clients like, okay, here are the answers for these funds. These are the answers for these funds. But I don't want it to feel like there's a ding if it's a no. I want people to probe deeper on the no's. Like, why is it a no? We're making a deliberate choice to not do this or to do this a specific way. So one of our asset manager members created this framework when they were talking to us of like resounding yes, easy. We're really good at that. We're doing really well. And then there was 2 questions that was a partial yes. And then we had really good conversations about them and got to engage at the toolkit level and at the FCLT research level with them on those 2 questions. Hopefully
Thank you,
this
Victoria. No, it's super helpful. And maybe just to add my own word to that, it's a device to provoke critical thinking about long-term focus in the organization. And so the broader use allows for the broader thought, and we encourage folks to use it that way. But ultimately, this is a product available to you. We're not asking for disclosure. We're not asking to publish it. We hope that you'll use it as it ultimately helps you focus on the long term. I have a question now about ahead of the curve, and particularly about the way that companies incorporate carbon pricing. Alan, I think this might be a good question for you. What are the ways that we're seeing companies incorporate carbon pricing into their capital allocation decision making?
That's a great question. And I think maybe 2 or 3 things that we have seen.
Okay.
First, when it comes to scenario planning, to adopt a shadow carbon price as an input when it comes to the scenarios. So a specific price on a price of carbon that they would then use flowing through each of their models, upside, baseline, and downside scenarios, and see how that affects their capital allocation decisions going forward. We've also seen them apply an additional charge like a carbon price to project valuations, all projects above a certain amount in dollar and monetary value. So any project above $10 million, the price gets applied. Likewise, on the bottom line, we're also seeing additional metrics that take into account the effect of carbon. So things like a net of carbon EBITDA or things that affect the bottom line. So both in scenario forecasting, geographic regional differences, but also the bottom line and how a specific carbon charge can affect profitability in the short run and in the long run. Those are some of the early things that we see, but we're looking forward to having that conversation in the coming weeks and months with our members and seeing what other interesting ideas, other cases that they may apply.
Absolutely. Punchline, folks, sign up for the December 12th working group. More to come. I encourage more questions to come in. I am going to turn to the next phase of town hall right now, though, and describe what's coming up. What you've heard so far today is our flagship efforts. Again, you can see them even on the bottom of this slide. Gold Standard, Compass, a very large effort called Ahead of the Curve. That's where we're planting our flag. We want to give you a sense, though, of how you can be involved in the near term as well. I'll give a little bit of a prologue to these programs. I said at the outset that we do all of our research with members. That includes scoping, that includes feedback, that includes preview. And it's really a matter of identity for us. Members created us in order to focus capital on the long term together. And it's also part of our strategy. We're prioritizing these topics because our problem-solving community of CEOs has identified them as ready for action. And we're bringing them into research that you can see here on the slide, and we'll ultimately bring that back out into the public domain so that we can lead and take action. Working groups are a big way that we involve members, particularly at the feedback stage of projects. I've said several times today, and I'll say again, stay tuned tomorrow for a message coming from FCLT. It'll have ways to get in touch with your relationship managers. They can answer any questions that may be on your mind after town hall is over. They can answer questions about these particular projects, including, for instance, sending you our 1 or 2 page project overviews, or as necessary, also connecting you to the research director who's leading an effort. We've made a point on this slide to identify the ideal participants for each working group so that everybody in the room can have a sense of how you might get involved. Now, 2 of these are already familiar, the ahead of the curve asset owner track and the ahead of the curve corporate track. So I'm going to set those aside. I think we've covered those well, and just say a very brief word about the programs coming up on October 28th and on November 12th. On October 28th, we'll have a working group with the title Reshaping the Proxy System for the Future. Our thesis here is that corporate and investment executives can drive change to the proxy system that they agree right now puts short-term pressure on companies and detracts from long-term investor corporate dialogue. It's a tough situation. We think that today's system may be built on an outdated view of investor corporate relationships, and it's complicated by the fact that investors, corporations, proxy advisors may have misaligned costs and benefits in that system. We think we can help bring some resolution, though, by calling our members together and having the opportunity to change the system by driving longer term outcomes as investors and companies who participate in this system. The next one that I'll say a word about is the November 12th program. It's got the title Demographic Diversification of Assets Under Management, a Capital Markets Perspective. It's really about the share of assets allocated to portfolio managers with diverse backgrounds. Our thesis in this case is that investors may find a new source for improving risk-adjusted returns by allocating more to portfolio managers with diverse backgrounds. I think we all know the situation we've looked at, and this is Victoria and Jesse in particular, we've looked at asset under management of portfolio managers with diverse backgrounds. This was a publication that came out in February and found even less inclusion than when just counting the numbers of people, and little to no change over the decades. The complication of that is, while diversity is oftentimes thought of as a social initiative, we think that allocating to diverse portfolio managers, like diversification in many other ways, may be a free lunch in investing. Now, we know that this is easier said than done, but we think that there's some leading investors already out there who are beginning to make progress. And we're going to call this working group together to see ways that we might all do that a little bit more. For these 2 working groups, October 28th and November 12th, your RMs can connect you to me, Victoria, and also Olivier Lebleu, who are involved in these 2 programs. I'm going to unshare my screen right now and check to see whether there's any more questions. There is. There's a question in here, Alan, that's popped up particularly for you about the reasons why a company might incorporate an internal carbon price in places like the US. So if you could just say a word about why folks might do this, and I'll couch it in the context for everybody in the room. This is part of the ahead of the curve research. That's the context of the question.
Right. I think it speaks to the name of the project itself. In short, to get ahead of the curve. Carbon is one externality. It's a major externality. It's one that we believe is coming at you and coming at you fast, to reiterate. So while you can put off the cost of carbon for a few years, the cost will eventually, we believe, catch up to you. Similar to other externalities that companies have dealt with in the past. You think about asbestos, you think about CFCs in the past. Carbon is another example of that. And we're already seeing examples of this in other jurisdictions, in Europe, in Canada, places that have had a carbon tax. We don't have one in the US yet or in some other jurisdictions, but we believe that such a global road, it's coming at you and really.
Draw out a theme there, Alan, that I've heard you use as well, and that is about the reason why companies have a view on interest rates, or investors have a view on interest rates. They may not be changing right now, but there is a view on the direction that the trend is going. Can you say a word about that? Are we right to observe a parallel between perhaps having a view on rates and a view on prices like this?
Yeah, absolutely. And just to go back to what my colleague Joel said earlier, we want to see this eventually as something of a natural input, similar to how interest rates are calculated, how some risks are calculated. You could foresee a world where interest rates, where inflation, and maybe the price of carbon gets baked into these things. So absolutely, we want that all to eventually flow into corporate decision-making when it comes to capital allocation.
Thank you, Alan. I'll say a word bringing us toward conclusion. FCLT culture is to respect you and your time. We must sometimes run early, but we will never run long. And so we're nearing the end of the material that we'd like to share with you today in Town Hall. You're going to have plenty of opportunity to continue talking with us through that message that I've alluded to now on several occasions. Your relationship managers can have these conversations. They can also connect in the research team that you've heard from today. So I'll encourage you to keep your eyes out for that and take advantage of it when you see it coming through tomorrow. We hope that you'll keep the questions coming. These questions that we've had today are good and important. And to the extent that we're able to interact with you, learn from you, and share information with you, we think our work is better and ultimately more useful to you as well. I'm going to bring us to conclusion just by saying a few words of thanks. It's been a special and heartwarming privilege today to share this time with all of my colleagues on the research team, to get everyone involved in this effort. Alan, Victoria, Jesse, Joel, appreciate each of you. It's possible only because of the work that our communications team has done, putting together this material and producing this program. Ross, to me, Brandon, we appreciate you. And then, of course, there's going to be relationship managers who are carrying it forward from there, and we appreciate that team as well. Most importantly, we appreciate you, the members who make all of this possible. You're the reason why we're able to fulfill this mission of focusing capital on the long term in support of a sustainable and prosperous economy. You're the reason why we're able to have longer time horizons, broader business objectives, wider access to capital markets. And that matters. That's why you created us. So a special thanks to you, our members, for making all of this possible. That concludes Town Hall. It's been good being with you today. We look forward to staying in touch and continuing the conversation. Thank you.